Well, I will retweet that we're live. Let's go to X and do that. It always takes me a minute to do it, but let's see where. There we go.
How are we making money today, guys?
I don't know, buddy. I'm not trying to make money these days. I'm trying to not lose money.
Not
return
lose as
of
much.
capital, not return on capital.
Yep.
I'm 39% cash. How about you?
Still 30.
Okay. But I'm looking. I'm about 2,000 into my 5,400, 5,500 charts. So stay tuned, boys and girls.
All right, let's and how about we take out a couple typos here and we post it, and we're gonna start because today is April 7th, 2026. I have Robert Marston, Kevin Bakes Baker. I'm David Maris. Very excited to be here today because we have a lot to cover. Let's see. I do need to mute this because I keep getting some echo. All right, so let's first talk about quantum physics. I just read an article that a Nobel Prize-winning physicist came out and said, by the way, Google's paper that they put out last week about quantum computing, people should take it pretty seriously because cryptography is the lowest hanging fruit for quantum computing, and cracking Bitcoin's code will be the first thing that everyone does. And so I don't own any Bitcoin. I will never own any Bitcoin unless I'm convinced somehow that the world is upside down and I need to do that. But yes, I did miss it from 8,000 when a young person that I'm related to told me to buy it to 68,000. But I think the next 60,000 is lower, not higher. But what do I know? What does a Nobel Prize winning physicist know? I'm sure all those wallets will transfer over to a new platform. But with that as a warm up, let's talk, Robert, some stocks. What do you have on the plate for us? I know it's not Bitcoin, but what did you want to talk about today?
Well, I have a couple of stocks that I want to talk to the show about, and in a different context though today, because I know the fundamentals, and and I've bought very small positions in each, and I'm looking for counsel from our chart guru, Mr. Bakesy, on how and when to potentially buy these things. So these are two stocks I mentioned in the past. One is a company called Everspin. MRAM is its ticker. We could start on that. I bought the stock last year in the sort of middle of the range at about 6 and 7. I got very fortunate and sold it at 13 because it had about a double for me in a few months. And I'm looking to buy it back. And if you guys remember, that's a company that makes a very unique kind of memory chip. And that chip uses magnetics to retain its charge, and it can retain a charge for up to 10 years and in a very durable manner. So it's much better than NAND flash or NOR flash, which are two memories that don't lose their charge or lose their memory when you turn off power. DRAM does when you turn off power. So this is really a niche business. It's a few $billion business globally, but they're only a $60 million company. And the story there is that people that make NOR flash also make NAND flash or DRAM, and because those prices are going through the roof, people are actually taking NOR flash capacity machinery equipment and converting it to making the other much higher priced chips. So that leaves a shortage in the NOR flash market, and these guys, for the first time this year, will have a pin compatible chip. Their chip in the past has been a specialty chip, and that meant that there needed to be a design period for a custom chip and a burn-in period where you had to test it for 6 to 9 months. And when you have pin compatible, you just swap it in and out. It's been tested to work properly.
So
So
what's the
this
symbol again?
MRAM. The
All
company's
right,
called
Kevin.
Everstate, but the technology is called MRAM, and like DRAM, MRAM, and flash, or like the big storage or memory chips out there. So uh, the stock is not cheap, but it's not expensive. It's in the middle. And Kevin, what do your charts tell you on where we might be fortunate enough to buy this if we were to get another correction in the seasonal and cyclical period of the midterm when stocks
Yeah,
traditionally.
when you said this in the member chat, I know you, so I figured, okay, Robert probably bought this 5 to 7. He sees this spike to 16, 17, and he sells half, which is kind of what I do when I have a double. I sell half, and then I reassess. And it sounds like that's like what you did. I'm looking. I don't like things below the 200-day moving average, but this is a very uh, uh, mild violation of the 200-day. I would sell an additional third, but for the sake of your question, 735. This is the breakout here and the retest of the low in November, and so I think if you see it around 735, $2 lower, then you might want to get more aggressive, particularly if you have strong views of the earnings coming up in 29 days. If you think that's going to reignite interest in the stock and prove the bulls right, then that's my thoughts right now.
Okay. Well, I was lucky enough to sell it 100% of it, but I sold it all between 13 and 14. So I didn't get 17. 17 was a day or two after I finished selling. So I was unlucky in that I didn't get the high price, but I'll take a trade from 6 3 3/4 to 13 any day of the week. So
Amen.
7 1/4, that fits with where I was at my, that's where I was thinking I'd want to buy it in the low to mid sevens. Maybe even high sevens, start a little bit just because I only have a tiny amount, and I want to have something. If the bottom happens to be $7.80, I might start nibbling there. But in the low to mid sevens, I don't think the
Yeah.
fundamentals are so explosive that you have to own the stock for this quarter. Could they have a big quarter? It's not that kind of business, but the core business they're in had a very big down cycle, and that was the analog chip business, and that's where they sell a lot of their products into. Even though they're not an analog chip company, they sell them into those end markets. So
So Kevin, I didn't understand. So what are you saying? What's the next move here? Because to me, it looks like it's kind of built a base, but higher, lower. What's our next stop?
Um, I don't really have strong views. I don't see big clues from the volume that handicap this. The fact that they did not like the last earnings report here gives me a little bit of pause. So I'm leaning towards the lower end, which is why I asked the question about the future earnings date on 29 days from now. So I would sit here with a catcher's mitt at 735 if you get there. And Robert has no problem buying stocks down. That's going to be $2. It's going to be, I don't know, 18% or so. But in the grand scheme of things, will it really matter if the long term picture improves? So 735 is my number. Do
All
we
right.
get there? I don't know, but I'm leaning toward the downside given the last earnings report reaction.
Right.
All right.
And
Sounds good. So
I don't think there's any short term necessity to own this stock, even with the earnings coming up in a month. But I think
And that's okay.
we really want to own this, for next year. At some point at
got
the
it.
end of this year, you want to own this for next year's fundamentals.
All right.
And then
So you said you had a couple. What was the second one?
the second name is LSI Industries, Lights, LYTS is the ticker. And that's the company that makes specialty lighting and specialty display and storage equipment for retail outlets in the fast food and convenience store and gas station area. So they make when you walk into a Wawa in Philly or a 7-Eleven nationally, they make like the dispensing machines and the hot food warmers and the refrigerated cases that have the pre-made hoagies, as we say in Philly, that kind of stuff. And
Is that really is that a growth business? Is there a big uptick in convenience stores, or what's the story with the what attracted you to this?
that's a very good question. It's a GDP grower, but it's a very fragmented business serviced by lots of regional mom and pops. And there's no, you know how there's national furniture companies that make sofas and beds and dining ware, dining furniture. There's no national company that makes displays and dispensing systems for specialty retail outlets. And these guys have decided they want to be the 800-pound gorilla. So they're doing a roll up without leverage, without a lot of leverage. In general, they do bolt ons for the most part, and they have capacity as the only player in the business to go to Chevron or to go to Wawa and say, look, we could design an entire store for you. And, so they have so many of the individual components that the metal and the wood and the cabinetry and the countertops and all that kind of stuff. So they're the only full service company that could design and deliver an entire store for a few different businesses. And that's a growth business, because more and more companies, they don't want, when they're putting a store in and they have thousands of stores, they don't want to deal with 14 vendors, serving 3 categories in 6 national regions. They want to go with one national company that's going to be able to do everything for them. And, scale prefers to work with scale. And in this business, they're the first to market with this capability. Now, will they be able to slowly put, the mom and pop shops out of business by taking market share? That's the plan. But, these guys were a $300 million business about 5 years ago, and they're going to be a $1 billion business next year. So half of that was acquired.
So here's a question though. You said they have a bit of leverage, but they also just did a secondary. And is it the kind of thing where as they roll these things up, I'm going to expect to get diluted each time they do it? Because, or is it, is that the price of admission to this?
No, as I said, the deals were mostly small bolt-ons, and they've always used debt and repaid the debt within 2 to 3 years. This is the first time they used equity, and this deal is a transformational deal and gives them a lot bigger scale. And they even paid 8 times EBITDA when their own stock was 10 or 11 times EBITDA. So they bought it at a discount to their own stock. And I believe it's so accretive that I think they're on a June year. I believe that they'll do $1.50 for the year that starts July 1st. So the stock at 18 is down to 12 times earnings. Okay. And because the deal was so significant, they'll obviously post, 50% sales growth. So when they start reporting this growth, it's going to be big sales growth and, bigger earnings growth. So I believe the numbers are going to read really well. And it's going to provide a tough comparison for next year, obviously. But, they should still grow 10 to 15% next year, I think, because they have a ton of cross-selling opportunities, because these companies had complementary products and complementary vertical end markets, which is good because they don't have a lot of overlapping business. So they could sell their new products to each other's, sales forces and customers.
All right. So you got a nice small cap growth company here, growth by acquisition company.
And I've owned this in the past, and I blew this out my butt by buying it at 6 and selling it at 12 and 13 and watching it go to 25, I think. But still, I intend to buy it back. I'm thinking bakes, around 15 to 16. What does the chart tell us?
Yeah, I'm a little bit higher than that, given the price history. But first of all, I just want to say that Wawa is a national treasure and should be treated as such. But I miss my Philadelphia hoagies. Anyway, 1720 is the level that I see here. You see how we've touched this so many times?
Yeah.
It matches the 24 peak, and then to your point, 14 is the next place where you'll find some support. But I think 1720 is reasonable. If it breaks that, I get a little bit more concerned. I don't like all this down volume in the wake of earnings, but maybe the deal that you've mentioned has not filtered through numbers and guidance and expectations yet, and that's the upside that we'll see going forward. So,
They
but
just
1720 is my number.
yeah, they just closed it last week, and I've only seen one guy do a pro forma. Because
Okay, so it's that recent.
yeah, it's not even in the numbers yet for sure.
That's usually a lot of fun when you bleed out the upside from accretion from an acquisition where you've got two guys covering this or two gals covering this. So,
Yes.
but 1720 is my number.
Okay, thank you.
All right.
Delighted.
So let's and that's you had two today, right, Robert?
That's the second one. MRAM was the first.
Well, I'm just saying we're okay.
No
so
three.
that's
Yes,
the
just
two.
two.
That's even no three. Okay. All right. So, Kevin, let's go to you. What do you have for us today? I know I had sent you some things I want to cover, but I don't know what you had for yourself.
All right, I'll move it along. But Kodak broke out on the last show I did. I mean, literally at 10:05, it started ripping. It was probably here, is my guess. And I talked about this, I think around $7.50, $8, 40% ago, something like that. And I just use it as an example of, checking our bias at the door. I thought Eastman Kodak was dead. I didn't think the stock existed anymore, and I was wrong. And so things have turned around here. It's not the greatest, company in the world, but like Monty Python, I'm not dead yet. And so you broke above 10. The call option was screaming. They had full year EBITDA, operational EBITDA, so it's not GAAP. Okay, I'll give you that. 62 million, 138% year over year. They had some good news with a deal with Ateos Systems for their clean energy battery technology. They've expanded their pharmaceutical chemical business for PBS, phosphate buffered saline, and water for injection. Tiny, but at least it shows that they're trying to do something with their technology. They've got 337 million in cash now. They cleaned up the pension, and they've got 208 million in long-term debt, dramatically down. So this is basically a race of 2/3 of the company is print, not growing, going down 3%, and then the other third is showing some promise. And will that take over and ignite interest in the stock further? And I go with the market seems to think so. And so this is why I use the chart to tell me where to go do more fundamental work. I myself can't own individual names, but I think this is really, really interesting. I prefer to be within 5% of the breakout point. So for me, that's 1050. And I'd wait below that to pick it off. And if you miss it, you miss it. Again, I can't play here, but I pointed it out in the past, and it's one of those situations where it percolated, and now it's boiling. So it's I'm intrigued, and we'll see how it goes from here.
All right. So you like Kodak. All right. What else? What else do you have? Kodak's not a name that you have a lot of people covering and talking about. So that's
that's kind of the point. As soon as you hear this, you almost have an emetic response. It's almost as a business school case study of what not to do. Stick your head in the sand with digital photography, but they're trying to make something out of this, and it looks like they are, and the market is telling them that they like it. So. I just
So we have two. We have two good names. We have LSI, which makes low tech stuff, and then you have Kodak, which is missed a whole cycle of something, but now is coming back. So these are interesting stories. What else did you have?
I have, this is a little bit. I just mentioned this because Tesla's been a punching bag for so many people. But I just think the more I listen to podcasts and commentators, and of course everybody, Elon is a lightning rod, but it almost sounds like he's conceded electric vehicles to the Chinese, and the story now is everything autonomous and robo taxis, and I think that's wonderful and promising. Waymo is an incredibly formidable competitor, but my tiebreaker is the 50-day looks like it wants to go through the 200, and I just don't hear anything on those two promising fronts that will ignite the stock, even for the most ardent Tesla bulls. I don't see what Ron Barron could or Kathy Wood could hear here that would dramatically move the stock. So if people have long positions or they have romantic notions of making money back during COVID, Tesla's going down, and I don't hear anything or see anything in this chart that says it's going to change anytime soon.
Mm-hmm. All right, so that sounds good. I do not own a Tesla. I kind of want to, but and I want to own it for the autonomous driving. I don't want to own it for the electric vehicle side of it. So maybe there's a hybrid in the future that will get the other 95% of the market interested. So I had a few other names to cover. I don't know, Kevin, if you had others that you wanted to.
I got one quick one.
Sure.
Robinhood, it's the same kind of thing. We now have the close below the 200-day. This is my sell discipline. So I get, I never lose a lot of money. I just don't. 50-day down through the 200. The 200-day is now turning down. And again, if you own Robinhood, I don't think you should. I think it is time for this to go lower. I'd prefer to short it on a bounce up to around 100, but again, I can't be in individual names. But for those of you who can, that's what I see in Robinhood. But I would not be waiting for. I think you need a crypto resurgence to turn this sentiment and stock around, and I don't think you're going to get it.
It's funny, as you said that, I typed in and it's still calculating it. I asked, what's the R squared of Robinhood stock price and BTC and the Bitcoin price? And the R squared is in 2026, the R squared is 90.92. So 92% of Robinhood's movement is explained by the Bitcoin price. For the full year of 2025, it was 0.28. So that's a pretty moderate correlation. It's still a correlation. So that's the kind of stuff that, when you hear something like Robinhood and you mention Bitcoin and you're wondering about for people who are listening, one of the things you can just easily do is just run a correlation and see what it is. And now, true, 92% could turn lower in the future, right? Because it was 28%. And so maybe that relationship breaks apart. But I think that what you're seeing is that it is highly, I don't know if I've seen a 92% correlation on two independent stocks before. Maybe oil stocks will do that, but yeah. So I'm with you on that.
So you have to be a Bitcoin bull to own the stock, and it's got to happen soon because the chart is telling you that it's taking on significant damage, and it's not going to happen anytime soon. That's how I interpret this.
Yeah. Well, that's interesting. So let's talk about some healthcare names before we close out here. And I want to just open up this other screen. So first on VKTX and some deals. So today another deal was announced. Yesterday, Soleno, SLNO, a stock that we've mentioned before that I owned, but then I sold out of it. And so I didn't participate in this buyout that was announced yesterday, Neurocrine Bioscience buying them out. But that's fine because it was below the sale price when I sold the stock anyway. So I'm okay with that. Just in the past month, there have been $41 billion worth of M&A deals announced in healthcare. And you're going to ask, how does this relate to VKTX? Stay with me and I promise I'll get to you. So 34 billion of major acquisitions, Merck, Lilly, Biogen, Neurocrine, Gilead, Novartis, all have bought companies. Then you have strategic partnerships, another $6 billion just in the last month. Lilly, Merck, Sanofi, Shionogi. Then you get IPOs, another $1 billion. Now that's just in the last month. Now in the first quarter of 2026, $60 billion worth of deals were announced for Chinese companies alone. Now, that's some biotech dollars where it's not cash up front, but just keep this in mind. Now, on top of that, in obesity, these are the deals that have been announced year to date. Novo announced a deal with an alliance for $2 billion. AstraZeneca did an alliance for 1.2. Pfizer did one for 500 million. Lilly did one for 55 million up front. Then there were 4 different obesity IPOs so far this year. $1 billion, one raised $1 billion, one raised 300 million. Okay, so I could go through even more detail, but what I'm getting at is 6 months ago, I sent to subscribers a thing that said, hey, listen, if you do forensic linguistics, you can see that VKTX, their language has changed over time of whether or not they were going to get a deal. They had been talking about, and a lot of people speculated that they might be acquired or that they would sign a licensing deal. But I noticed that their language just sounded different. So I ran a screen and ran several screens, and it took over a day just to go through this. And it came out clearly that their language had changed from fairly confident that there was going to be a deal to, hey, we're going to go this alone. I mentioned all these other deals because if you're the business development person, Lilly came out and said, we see 15 deals a day or something crazy. They're doing all these deals. Do you think that Viking Therapeutics didn't come across their table? Like they weren't like, oh yeah, let's take a look at this, the other big player in obesity. So the stock hasn't cratered. I'm not entirely sure why, but just keep that in mind. I still believe that there's no deal at hand for them and that they're going to end up trying to finance themselves out of this, or maybe a partnership. But if you're Lilly and you're working on the 3rd generation drug and you have an oral drug, how the bar is set so high for Viking that I just don't see it. So and pricing has dropped so much. So are you really going to invest this much in in manufacturing to maybe have an also ran? Again, I 100% don't see it. I'm still short a little. I don't believe that individual investors should short. I don't think it's such a great business model, but I do it for fun here and there. For institutions, if you own this, I would take seriously what I've just outlined and think about it. I'd love to hear the pushback. What does the chart say, Kevin?
It's it's done some damage closing below the 200 day. I don't see there aren't any volume clues that I'm really reading anything into. But I just think that with every passing day that no one asked them to dance, that what are they going to say on their earnings call, and what do they have for data releases that are going to move this up? And it looks to me like this 40 to 42 level is a pretty formidable lid, and I'm not hearing from you or anybody news that will change that sentiment around. So I'm we've been, and it also is in the financial press. It's also, this used to be, oh well, this is a very likely takeover target, and that's faded with every ensuing deal, which is why I asked you that in the member chat. So there's so many things to do. Why be involved here on the long side?
Yeah, because all you're really betting on is that there's somebody out there who's going to buy them, and you're right. You have I don't know, Google down 10%. Is that a better outcome? I would do that before I'd risk it on, oh, hopefully they'll make it. Meanwhile, every day they're burning cash. So that's just my view there.
I think waiting for fat pitches makes all the sense in the world. I mean, sometimes the inactivity is the best thing you can possibly do. Just kind of where we are right now, I think.
Hey, Robert, do you like that he yes. worked in a fat pitch with an obesity play?
Absolutely. I love it.
It's clever.
I'm very clever. I'm a wordsmith. Okay. Yeah, I thought I made it obvious.
So on Merck, I had said something the other day of like, hey, listen, I still own it, but here's some, I put into our chat a report that I wrote on everyone's saying that they did 5 deals and that should make up for Keytruda, and I just do the math that it doesn't work that way. The odds of getting 5 things right to fill a hole is actually very much much more difficult than it sounds. The odds are, I think it came out to like 16% or something that actually works, because you have to get each one of them right. Now, there are arguments against that of like, well, maybe you get 4 of them right and 2 of them turn out to be way bigger. Okay, I guess you could make up whatever scenario. Maybe they only get 1 and it turns out to be a blockbuster. You can come up with anything about unicorns and flying pigs that you want. That's not how the math works, but that's fine. I think they're doing what they should, which is, hey, we should try to come up with some good deals here, and more or less they look okay. But it is an added risk. What does the chart say that's going on with Merck?
And it's uncanny how often this happens. I mean, this is how stocks work. They run into resistance and then they have a hard time making upward progress. This is 125 to 135 or so that we hit in early 24, and it's very logically stalling out here. It's having a hard time making much progress after this breakout back in December of 23. So I think you're stuck in this channel for a while. And for a Merck, it's very difficult for them to come up with something that obviates the Keytruda patent cliff and provide solace to the bulls that they're going to have upside to earnings going forward, given that. So I'm with you. I think it's a sell at 125, and it's maybe a buy at 110, but I'm not enthusiastic about it.
Yeah. Well, my cost basis. Yeah, my cost basis is in the low double digits, so we're going to. I'm going to hang on for a while, but I do think that that it reminds me a little bit of AbbVie, and so I'll go back on the history of AbbVie. People worried about Humira, they worried about it, and then they worked themselves through it, and it turned out to be a pretty good stock. But there were periods of underperformance. I do want to just kind of time that, because it does remind me a little bit of that. I will mention just lastly, the insurers are all up today. And you look at United Healthcare up 7-8%, and all the others. Essentially, the administration came out today and said Medicare reimbursement will be like 2.8%. Everyone was expecting 1%. They had previously proposed 0.9%. So this is a big upside. This is giving managed care plans a whole bunch of reason to celebrate. It's free money. If I told you I was going to pay you $200 to mow my lawn, and then I said, by the way, here's $250, you'd be pretty happy. It is sheer profit. Now, some managed care people will be like, no, it's not. There's going to be some added things, but it is good. Would I continue to buy it up here? I don't own it, so I can't really answer that. But these things have a long follow through. They have a whole year follow through, maybe 3 quarters, until you start worrying about the next reimbursement rate publishing. So, in my experience, these things have a long tailwind, if that's the right. It really pushes them along for a while. It covers up a lot of mistakes. But with that, I don't know if we have any other questions or anything else you guys wanted to cover.
That lawn mowing bill is 206 instead of 200, not 200.
Yeah, I know. I know.
2.8%. So Trump did his normal thing. He said 0.8, I believe it was, or 0.88. So yeah, it rounds out to 0.9. And then everybody went batshit crazy, saying we can't work with that. So then he settled at 2.5, and he proposed 2.5. Everybody would have gone batshit crazy, saying we can't work with that. So
right,
Medicare got a deal at 2.5% because.
Hey everybody, I'm here. I don't know where the others went. Sorry about the technical glitch, but I'm going to sign off. I don't know if the others are coming back, but we were wrapping up anyway. So it is April 7th, 2026. Go to wallstreetbeats.com to get even more of the behind the scenes, some of our notes, and or go to passes.com/wallstreetbeats. Talk to you soon. Have a great week.